All right, the debt management bond auction, July 20th, priced the 5-year bond somewhere in the region of 10.7%. Were you surprised at this figure?
Well, I think the 10.7 was not surprising based on the trading as of the 19th, where it closed around 10.7. But what was interesting was that only 15 billion was put on offer. The prior 3 months, the DMO had been selling 35 billion of that 5-year bond, April 2015, and they cut it down to 15. So probably had excess demand, which is what pushed the yield down to 10.7. But the newly reopened 2018 May, which was at 11.49, was a bit higher than I would have thought. The spread between the 2018 and the 2015 was a bit more than I would have thought. Inflation
figures also out for the month of June, 10.2%, quite close to the CBN's target. How's that going to influence the MPC's decision on interest rates next week?
Well, I think in terms of the inflation rates, I think it's worthwhile looking at the numbers that have come out every month since January. I mean, it's gone between 12 and 11, and you really haven't had any two consecutive months of 11% or less. So really, this 10.2 might just be part of the pattern of the inflation rate jumping between 11 and 12. So we really need to see it sustained. So I'm not really sure exactly what other parameters CBN is using, but given the fact that that rate hasn't been sustained over consecutive months at these low levels, they might have to make some adjustments to bring inflation in check.
And these inflation figures and their impact on bond yields?
Well, I think we've seen that there's very little correlation between the two. Yes, those inflation numbers came out before the auction. So maybe the people who were bidding as low as 9% on that 5-year at the auction were looking at dropping inflation and were placing their bids that low. But really, those rates, again, are largely driven by demand and supply. But if we could get a few months at a 10-point-something level, then maybe the rates will start to come down again.